Hello everybody, my name is Daniel Evans and I'd like to take a few minutes to explain to you how you and your team can play the upcoming business simulation, ebikes. The business simulation basically allows you to compete against other teams. You are not playing against the computer, you are playing against a number of other teams that are identical at the start. So all of you start at the same position and will try to earn market share and profit competing against each other. Winning the game basically is defined on your ranking, and we'll use various items to rank you over time. We'll use the total market share in the production and sales of electric bicycles. We'll look at the margin that you're able to generate, and we'll look at to what extent the decisions you make are responsible decisions. We'll also be considering your ability to work as a team and build your performance over time. So we're not just going to look at 1 year's performance, we'll be looking at performance over a period of time, how to learn as a team, and eventually how to manage. Everything you need to know about this simulation is in the manual, and I hope you have time to read it. The first decision sheet, all decision sheets are Excel spreadsheets, is a simplified decision sheet. There are no loans possible, there are no banking decisions in the first period. Basically, you will decide on if you want to buy machines, how many people you want to hire in addition to the number of people you already have, if you want to have sales workers coming on board, how many units of different bikes you want to produce, what your marketing mix will be to sell the bicycles that you produce, so how many euros you want to spend in different items of marketing, and you'll also make a decision to invest or not in research and development to produce and sell the two types of bikes that you need to invest in before selling. Decisions 2, 3, and 4, as I mentioned before, you will be allowed to have a meeting with the bank to eventually request a loan, to request that the bank covers a % of your client receivables, and that's explained in the manual, or to request a subsidy. Also, during the last decisions, 2, 3, 4, and 5, you may buy and sell bikes from each other if you have, for example, a large stock available because you may produce too much. So decision 5, as I mentioned, there are no bank services available. You can continue to sell across to other companies. And I want you to assume that the company will continue. So I don't want to see companies selling off all of their machines in the last period. You should assume that the company continues on after the 5th year. So the simulation basically breaks down your decision process into 4 steps. You'll be obviously reflecting on what decision to make, on the data that you've collected, on the information maybe that you purchased in order to make a decision. You'll then make the decision. You'll look at the results of the decision because we'll give you the results of the decisions that you make. You'll analyze the decisions and we recycle back, reflecting, deciding, improving, hopefully, the decision-making process over time. What you'll produce as a team, obviously, is the decision sheets. So you have a series of decision sheets. Each sheet must be completed and sent to the teaching assistant or your professor. I ask that you rename the file to make sure that you include the number of your firm on the name of the file, and also make sure you include the number of your firm on the inside of the decision sheet as well. Please do not add rows or columns to this decision sheet. Make sure that you don't change the format of the cells. And also, if you want to put a 0, you may in the different cells, but you may also leave it blank, and that corresponds to a 0 value as well. You may have some other activities. For example, in the beginning of the simulation, we'll ask you to take a position for your future organization, where you want to be when the game ends, and we'll probably ask you to submit a short presentation at the end as well of the simulation. So your company is basically a business unit that produces and sells electric bicycles. It's owned by a holding. The holding has provided your company with capital and resources to start your business operations. Your job is to grow those activities within an environment that's relatively stable. Your mission is to manage this business activity for which you have a high degree of autonomy, grow your market share, definitely in value, make sure your investors are happy, so eventually give them dividends if you can, respect various norms of social responsibility when making decisions, so you're concerned about the well-being of your employees, for example, grow your profits, and overall develop performance of your company, how well it performs. You'll be starting your company with 4 million euros in capital. 2 million of that capital has already been spent to buy 5 standard machines, so 5 times 400,000. Each machine costs 400,000. These machines are in place and ready to be used for your first decision to produce bicycles. You also have machine operators. 45 machine operators are ready to work and have been employed already by your company. The overheads or fixed costs annually are 450,000 euros per year, and you have no stock of production to sell at the moment. You will be producing and selling within you'll be producing potentially 4 products that are being sold in 2 different markets. When you start, your company has 2 products and they're sold in 1 market. So your company can currently produce what we'll call the city bike, which is a standard 2-wheel bicycle, electric bike used in the urban centers, and a mountain bike, which is a little bit more terrain rugged bicycle. And these bicycles are both sold through multi-brand large stores like Intersport. Your company will have the opportunity to produce 2 other types of bicycles, a foldable bicycle and what we'll call a utility tricycle. These bikes are a little bit more complex in their sales process. Quality is extremely important for final consumers. And these bikes are sold through specific small pro shops where customers can get a little bit more information about the quality of the product. And so you have 2 different ways to distribute bikes. One through the large stores for the city and mountain bike, and through the smaller pro shops or small stores for professionals for the foldable and utility bikes. These last 2 bicycles can only be produced and sold after you make an initial investment in research and development. After you've accumulated 1.5 million euros in investment in foldable, you can produce and sell the foldable bikes. After you have made an accumulated amount of investment of 2 million, for utility, you may produce and sell utility bikes. The total investment does not need to be done at one time. It can be done over a period of times, and you can only sell and produce the year after you achieve the 1.5 million or the 2 million in investments. The city bikes are sold by major sports retailers. As I mentioned, Intersport is probably a good example. The potential demand is 4,000. It's a fast growth market. The reference price today is 810 euros. You may subcontract the production of city bikes. You don't have to produce them. You can have them produced by a third party if you want. And you can learn more about this and see this grid that I'm projecting here in the manual. The second product, is the mountain bike. Again, it's sold by major sports retailers. Potential demand is about 2,000 per company that's in the market. It's growing a little bit slower than the city bike is. Reference price is 940, and again, it can be subcontracted. The third product, the foldable bicycle, is sold in pro shops, as I mentioned before. The potential demand is 1,500 per company. It's in a growth stage right now. It has a reference price of 1,250 when quality is equal to 100. If you increase the quality to, let's say, 105 or 110, you may be able to sell for a higher price. And if it's lower quality, you may be able to sell for a lower price. But quality is important in this market. So don't forget, if you want to sell more, you may need to increase quality, and that means you need to produce higher quality of foldable bikes. To produce higher quality, you need to have happy employees and machines that are not old. Production and sale is possible only after you've accumulated $1.5 million in investment of R&D. The utility bike is similar in terms of the market to the foldable bike. A little different potential demand. It's a high growth market. And again, quality is extremely important. Here, the R&D amount you must finally invest is $2 million to be invested. To produce these bicycles, you have two different types of equipment. You have what's called a standard machine. Each of these costs $400,000, and that's what you currently have, as I mentioned at the beginning. Once you buy these machines, you may use them 1 year after they are purchased. They're not delivered right away. It takes 1 year for these machines to be delivered. Each machine has 15 workstations. So for each workstation, you can put one person at a workstation to produce bicycles. So as you can imagine, one standard machine can be operated by 15 people. If you have less than 15 people, you have a machine that's not working optimally. Each workstation can be productive for 1,600 hours. So a person working 1,600 hours can work at one of the workstations. Fixed costs of the machine are $20,000, and this machine is depreciated over 5 years. You also have what's called the Fast-Tech machine. The Fast-Tech machine is a little bit more expensive, but the advantage is that it can be used the same year you purchase them. You don't have to wait a year to produce the bikes. In addition, each machine has 20 workstations, so a total productive capacity of 1,600 hours per workstation times 20. Fixed costs of the machine are the same, $20,000. However, this machine is depreciated linearly over 6 years. As you start with a total of 5 machines, you have 15 workstations for 5 machines, so you have 75 available workstations. Each one of these workstations can produce 1,600 hours of production, so you have a total technical capacity of 120,000 hours available. The question is, do you have enough people to produce that much? So you have to make sure you have the right number of people to produce the capacity. Here's a graphic image of what this looks like. Each machine has basically a certain number of workstations, and you have to make sure that the people are there to work. The production machines can be used to produce any bicycle. And in fact, you cannot say which machines produce which bikes. If you want to increase the quality, for example, for utility bikes, you must increase the quality for all production of bicycles. Productivity depends upon the learning curve and the skills of the operators and the machines themselves. So productive capacity can be anywhere from 16 to 110% of nominal capacity when everything is just normal. If you are not training your people well, and if the machines are not being maintained well, their productive capacity will decrease. And it can be actually much better than expected if people are paid well, trained well, and you've maintained your machines properly. If you decide to sell a machine, it's sold at the end of the period of decision, meaning you can use the machines during the year that you sell them. And their value is basically their purchase value less depreciation. So if you sell it after 5 years, it's not worth anything, at least for a standard machine, because it's been totally depreciated. And remember, if you want to increase the quality of production, quality depends on workers and machine productivity. Materials to build the bikes are purchased just in time. You don't have any stocks of steel tubing or chains or whatnot, or rubber tires. You have a supplier that you trust, and they're able to meet your demands for just-in-time production. Your supplier of raw materials gives you 60 days credit, so you buy and you must pay them within 60 days. And if you have cash available, it will be paid in cash, and you get a discount of 1% on your costs. So having cash on hand in your company allows you to buy your inputs at a lower price. You have different types of personnel that you have that you can hire. Obviously, you start with a certain number of employees, and we already mentioned that. The salary is based on an index. So if you currently pay your machine operators 100, the index of 100, that's equivalent to 25,000 euros in the first period. If you want to change their salary, well, then you can change the value of this index to let them get them to pay more. Also, it's important to note that the decision you will make is the change in the number of operators. So if you want to hire more or fire people, you will indicate the change, so +2 or -2. You also have specialized salespersons. Their base salary is 30,000 with an index of 100. So if you want them to earn 30,000, you will put in your decision sheet 100 for the index. Be careful, because the number of salespersons must be defined each period. If you want 20 people selling this period, you will mark 20. If you want 25 next period, you mark 25. You don't mark the change, you mark the total number of sales agents. The cost to hire new operators is 10%, and the cost of firing people is 30% of salary. Part-time employees will be hired automatically up to 20% of the number of operators and are paid a premium. So if you have machines available and you don't have the people, and you ask your company to produce more bikes and there's not enough people to produce the bikes, part-time workers will be hired automatically, but only up to a limit of 20% of the total number of operators. Financially, you can borrow money. The standard loan is at a rate of 6% over 5 years, but that obviously is negotiable. If you spend more money than you have in your bank account, you will be charged an overdraft fee of 10%. You may discount your invoices, and there's a 5% fee, and there's an explanation of that in the manual. Basically, the bank can, if you have customers that owe you money, the bank can give you the money that they owe you, and the bank can go out and collect from your customers. To do that, they charge you 5% of the total amount your customers own. And we should note that basically we can discount up to 70% of receivables. This is what you would negotiate with the bank, is the percent of your receivables you want the bank to go out and collect and to give you cash right away. All cash receives interest of 3% if you have cash in the bank, and your corporate profit tax, based on your total margin at the end of the period, your profit is 35%. If you need a subsidy, again, you must also negotiate that with the bank. Other information that may be important for you to know: prices and salaries are generally stable. We don't have a lot of inflation in the game. The key marketing budgets are optimized between 0 and 10% per marketing activity, so 10% up to 10% of product sales revenue expected. So if you want to determine the amount you invest in a certain type of marketing, those are the limits. If you can't supply demand that you've generated, you will negatively impact your brand loyalty. So if you generate a lot of demand but you don't have any bikes to sell them, you will lose customers. Lastly, distribution costs are about 1% of annual revenue, and you'll see that in your tables. So there are two types of decisions you'll be making as a team. There are general decisions and product decisions. General decisions concern financial, asset decisions, social, and general information decisions. The financial decisions: do you want a bank loan? Do you want to discount your invoices? Do you need a subsidy? All of this, again, is not available in year one if you want to do it. In terms of assets, you may buy and sell machines, and it's extremely clear that that in the decision sheets. Make sure you mark -1 or -2, but always a minus sign when you sell a machine. Be careful with year of delivery. Remember, standard machines are delivered the year after. They can't be used right away, and they're sold at book value if you sell a machine. Your social decisions: hiring, obviously, and letting people go. The salary index for operators, and your social training CSR budget. Both of these impact productivity. For each product, you'll determine the quantity you want to produce and the quality for foldable and utility bikes, the price that you'll sell, the different amount of money you will spend in offline, online, and specialized marketing. This is to be indicated as in terms of euros, and usually this is a percentage of expected sales. As we said, it ranges between 0 and 10% for each of those lines of marketing. It's up to you to calculate what you want to spend in euros and put that value in your decision sheet. The sales force, you'll want to define how many salespersons you want and how you will incentivize them with salaries or bonuses, or for if they get a percentage of commissions, for example. Your client credit, you can have your customers pay up to 90 days after they buy. Obviously, remember, you're paying your suppliers 60 days, so keep that in mind. And eventually, subcontracting production of the city and mountain bike can be done right away. And you can also, as we mentioned, eventually subcontract to other players in the game. So future subcontracting is possible, but not possible in year one. And this is subcontracting between teams playing the game. In terms of your product decisions, the expected demand, what do you think the demand will be? Make sure you keep in mind the number of bikes you have available to sell in inventory, and make sure that your productivity is appropriate for the number of bikes you need to produce. So be careful on your productivity. In terms of results, you'll be given your results in terms of sales. You'll see financial and accounting results, and you will be able to purchase various studies, which will be delivered to you in email. So what you'll get when you ask to get, after you've made your decision, a few days later, you'll receive a PDF file which has a structural dashboard, a product dashboard, income and balance sheet, and any studies, additional information you may have ordered. So to do, please read the manual. The teams will be announced, and you'll be asked to submit your first decision. Please send that to your professor or TA. I will be in charge of generating the results and sending them back for distribution. Good luck to everybody. I hope to see you soon.